Hey guys, what's up? I'm Erin and welcome back to the channel. When it comes to buying a home, if you can afford to buy one in all cash, should you? Now let me pause before I go too deep into this video because I can feel that there's gonna be some people who say, how can you possibly make a video like this right now? Don't you understand how unaffordable housing is? Yes, I've seen home prices, I've seen the headlines, I know interest rates are on the rise, and I know for middle income earners, it's very difficult to afford a home right now. But more people than ever are buying homes with all cash. And I know even having the option to consider buying a home in all cash means you're in a very good financial position. But for a lot of super savers, this is a real option. In fact, a third of all home sales are to all cash buyers. And much of this has to do with interest rates. When you could get a mortgage around 2 or 3%, it often seemed like a no-brainer. A mortgage was the way to go. However, today, with interest rates hovering around 7%, that's an entirely different story. For the home buyer who's able to buy a home in all cash, this is becoming a real debate. Do you take out a mortgage at a higher interest rate, or do you leave that money otherwise invested? Because when mortgages were sitting at 2 or 3%, you probably felt pretty confident that you could leave this money otherwise invested and get a better return on your money. But today, with those rates hovering around 7%, it's pretty unlikely that you can go out and find a guaranteed 7% anywhere else. Let's say you're looking at buying a $400,000 home, doing 20% down, 30-year mortgage, and your mortgage is then going to be $320,000. Let's compare today's interest rates versus the interest rates just a couple years ago. Today, with interest rates sitting just above 7%, the monthly payment on this type of loan would be a little bit more than $2,500 a month. And over the course of this entire loan, a borrower would pay roughly $470,000 in interest. However, let's rewind to the summer of 2021, where you could easily get this same mortgage for about 2.5%. And with those terms, your monthly payment for the same house would be about $1,600. And over the course of the entire loan, you would pay roughly $135,000 in interest. Those situations are wildly different. For borrowing the exact same amount for the exact same home, you end up paying over $335,000 more in interest for the exact same home. So it's no wonder when people are able to why they're buying more homes in cash these days. Perhaps you're in the market to buy a home and you're wondering, should I buy this home in all cash? Well, there are a few things to consider. First, you have to consider, where is this money coming from to buy this home? If this money is coming from investments, you have to consider the tax implication of selling these investments. If you've only held these investments for less than a year, they're subject to tax at ordinary income tax rates. And keep in mind that ordinary income is often subject to some of the highest tax rates. And if you would be selling enough investments to cover the entire purchase of a home, that would be a very sizable sum and would be subject to a pretty hefty tax burden. However, if this money is coming from the sale of investments that you've held for longer than a year, then it's going to be subject to far more favorable tax rates, long-term capital gains. Still, depending on the amount of the withdrawal, for those sizable sums subject to long-term capital gains, they're still facing a rate of 15 or 20%. For a married couple filing jointly looking to buy a $400,000 home, taking this entire amount from long-term investments, the tax consequence would be around $47,000. That's certainly far less than the lifetime interest on a 15 or a 30-year mortgage. Now, you don't want to just consider the tax consequence versus the potential interest on a mortgage. You also want to consider the opportunity cost of taking this money out of the market and what it could otherwise grow to over a period of 15 or 30 years, because that amount is substantial. But with interest rates sitting where they are, it's hard to assume you'd be guaranteed to beat those rates with market returns. But still, it's a factor to consider. But if you do go this route and you withdraw this money to pay for a home, it probably frees up a lot of your paycheck. So you can take a lot of your dollars and allocate them towards investments and replenishing your investments as you go. It's still worth running the numbers to see if you want to do a mortgage mortgage today. Maybe you take out a mortgage today, but you refinance down the road when rates are more favorable. Yes, we're in a high or a higher interest rate environment right now, but that's not to say that we're forever going to be in this environment. Maybe 4, 5, 6 years down the road, maybe those rates come down and they look a bit more favorable. At that point, you could simply refinance and capture these more favorable rates. In this way of thinking, you might consider the mortgage you get today to be kind of a bridge loan. It's the loan you have today until that time you hope down the road you can finance for a more favorable mortgage rate. Or what if this money is coming from a retirement account? Think a 401k or an IRA. When it comes to these accounts, keep in mind that there's a lot of rules and restrictions around borrowing money or taking money out to put towards a home. And in general, I really don't like touching tax-advantaged accounts in order to pay for a home. Those dollars in your tax-advantaged account get to grow tax-deferred or tax-free, so I really feel like disturbing their growth when they have such great potential is doing yourself a disservice. So I'd leave those retirement accounts alone. Now, the conversation changes dramatically if the funds for the home you're buying are coming from the sale of, say, your previous home, because the IRS allows for some very favorable capital gains treatment on the sale of real estate, assuming you've lived in this previous home for at least 2 years. If you're a single tax filer, you would be exempt from paying capital gains tax on up to $250,000 of home appreciation. And for those married and filing jointly, that number is $500,000. So if you can take advantage of going this route, selling your previous home and then using that money to buy your next home in all cash, and you don't face any hefty tax consequence, it kind of seems like a no-brainer to just go forward and buy this home without even considering a mortgage. The key point to keep in mind for this route to work is that this home has to have been your primary residence for at least 2 of the past 5 years. And while that time doesn't have to be consecutive, for those married and filing jointly, it does apply to both parties. It's also worth keeping in mind that the interest you pay on your mortgage, you can deduct from your taxes at the end of the year if you itemize your deductions. The caveat here is that you only want to itemize if taking an itemized deduction leads to a greater deduction than simply taking the standard deduction. According to the IRS, roughly 87% of tax filers take the standard deduction every year. And whether or not you personally receive the greatest benefit from itemizing your deductions or simply taking the standard deduction really depends on your personal circumstance. But if you're going to make the argument that mortgage interest is tax deductible, you want to make sure you're receiving the greatest benefit from itemization. The other really big thing to keep in mind if you want to go the all cash route is you want to make sure that you still have money left over after you pay for this home outright. For instance, you still want to have an emergency fund, because if buying this home in all cash drives your emergency fund down to nothing, well, what if the unthinkable then happens? What if you have an emergency? What do you do? So you want to make sure that you still have adequate cash reserves to cover something like a job loss or a medical emergency or any other situation that would cause you to heavily rely on your emergency fund. So I wouldn't go depleting my emergency fund to pay for a home. And in the same vein, I wouldn't go depleting all my long-term investments. You know the whole saying about being house rich and cash poor. I wouldn't want to drive my investments down to nothing. You want to have money to fall back on in case anything happens. You still want your money invested, working for you, building you a wealthier future. So while paying for a home in all cash can be a great option, I think it's a far less attractive option if it drives all of your accounts down to next to nothing. And as with everything in finance and pretty much everything in life, it doesn't have to be an all or nothing approach. It doesn't have to be you either pay cash for the full amount of the home or you finance the entire amount. You can find a happy medium. What if you were to put down a very sizable down payment, maybe 40, 50, or 60% of the home's price, and then finance the rest? If you take out a significantly smaller loan, that would greatly reduce the overall interest that you would pay on this mortgage. Or, like I said before, maybe you take a mortgage today and refinance down the road when rates are more favorable. Or maybe you take out a mortgage and focus on aggressively paying it off as quickly as possible. There's no one right approach. There's the approach that you can create that works best for you. And it's no doubt that if you're in a position where you can consider buying a home in all cash, you're in in a great financial position. So bravo, just make sure to consider all options before going forward. What are your thoughts on buying a home in all cash? If you were in that position, would you do it? Or would you still take a mortgage? Let me know your thoughts in a comment down below. I post new videos every single week. If you got anything at all out of this one, please give it a like. If you're new here, please consider subscribing, or if you know of someone who might get something out of this type of content, please consider sharing. I'll see you soon. Bye.